Welcome to the Meb Show, where the focus is on helping you grow and preserve your wealth. Join us as we discuss the craft of investing and uncover new and profitable ideas, all to help you grow wealthier and wiser. Better investing starts here.
Meb Faber is the co-founder and chief investment officer at Cambria Investment Management. Due to industry regulations, he will not discuss any of Cambria's funds on this podcast. All opinions expressed by podcast participants are solely their own opinions and do not reflect the opinion of Cambria Investment Management or its affiliates. For more information, visit CambriaInvestments.com.
This episode is sponsored by our friends at YCharts. If your current investment research and analytics platform is being phased out, you're facing a forced transition to a platform that isn't battle-tested and you didn't choose. Now, you can either 1, scramble to adopt the platform you're being pushed towards, deal with the learning curve, and hope it works for you, or 2, take control to switch to a platform that's not only smarter and faster, but also gives you the flexibility to work the way you want. That's where YCharts comes in. Its user-friendly design means no clunky interface, no wasted hours just trying to pull data, create client proposals. It integrates seamlessly with Orion, Black Diamond, Redtail, Adapar, all the platforms you already rely on. And it makes research, screening, client reporting effortless so you can spend more time advising and less time fighting your software. For a limited time, YCharts is offering an unheard of discount to advisors making the switch. This is one of those rare moments when you can upgrade to a better platform and basically get the rest of this year for free. Click on the link in the show notes, tell them Meb sent you to lock in your deal before it's gone and see why thousands of advisors trust YCharts to power their research and client engagement. Note, new customers only, must show proof of platform sunsetting to qualify. Welcome back, everybody. We got another awesome show today. Our guest today is Aaron Froug, founder of Griffin, the company that helps you buy stock where you shop. We talk a lot about financial literacy and helping more Americans invest, and I'm excited about what Griffin's doing, the potential to help get more, particularly young people, to invest. Aaron, welcome to the show.
Appreciate it.
So this is going to be fun because longtime listeners of the podcast and on the blog have kind of listened to me talk about investing and all my crazy ideas over the years, and also my angel startup investing journey. For many years, been looking for a offering somewhat similar to what you guys are doing. And so listeners, full disclosure, I am now an investor in Griffin twice, I think, but also a client. So I have an account. So we'll talk all about this. But the reason being is because I like what you guys are doing. For the listeners out there who have never heard of you guys, what's Griffin? Give us a 2-minute overview.
Yeah, so we're Griffin. Griffin stands for the greatest revolution in finances now. And we built an app that automatically invests people where they spend their money. So if you go and buy a cup of coffee at Starbucks and invest in a Starbucks stock, you shop at Whole Foods and invest you directly into Amazon. Basically, our whole intent and purpose is to normalize investing and connecting it to people's lives. We actually focus on the reasons why people don't get started. It's actually a lot more psychological. So it's how do you get people to feel good enough, confident enough, excited enough to just get started. It's sort of the riding the bike concept. You can tell somebody as much as you can about how to ride a bike, but what's the best way to actually just get them started? And that's going.
So listeners, you can find the app on Apple. And again, I'm a client, so we'll walk through this, but basically explain. So you onboard, you set up a brokerage account, then what?
So it's kind of just like getting started, opening up any brokerage account, or even, when for people who haven't invested before, it's like opening up a bank account. So you go on, you give your information, you kind of create an investor profile, but it's sort of a easier set it and forget it type of thing. So you just connect your bank and your favorite cards that you use. We built a technology that tracks the transactions, determines whether or not they're public, and then it automatically invests you across where you spend. So it's the cool thing about fractional shares is that you're able to invest with very, very little amounts of money. So most of our customers start off with $1 per transaction. Let's say you buy something at Starbucks. At that time, you are investing $1 into the company, and that's sort of added up over the week. And then you can own all the brands that you're spending with.
So just to make this relatable, listeners, so I have an account. It's got almost $2,000 in it. So we're moving up. But each week you get this update because it syncs to your credit cards, it syncs to your debit card, and where you make purchases. So if you look at my companies, for example, not surprisingly, Amazon's on the top of my list. Been buying a bunch of my wife's new books on there probably. Papa John's, we got Walgreens, Starbucks, Uber, And then we always have some random ones. I'm like, Cheesecake Factory. I'm like, I'm not responsible for that. That's got to be my wife and child. Albertsons. And it's funny because you'll see ones like Intuit, which is one of my nemesis, but we use them for QuickBooks at Cambria. So, and then you'll see ones that are like, oh, it's interesting. How does that even tie in? Waste Management, Lowe's, Constellation Brands, Chevron, on and on. And so it's a really fun, tangible connection to what you're doing, what's going on in the real world. How do you set up the amounts? So if you're an investor that comes on, is it something where you say, look, I want $1 to go in, or do I set it per company? Because I have a lot more Amazon than I have everything else in my account. How's that work?
Yeah. So when we first started this, we went around and we interviewed like 500 people around our university, and then everybody who was outside of it. And we asked them a lot of questions about why they invested, why they didn't invest. And one of the things that like made people most comfortable was having a consistent same amount. So when we start off, and we tested this out too, like everybody starts off with investing $1 at a time. So no matter how much you spend, it's completely based off of frequency. You're investing $1 in a company where that you make a purchase, but you can change it within the app. So we have some people who are investing $50 every transaction. It doesn't matter. You can choose that. You can set limits. You can even turn off companies you don't like. So if somebody, let's say, doesn't believe in a brand, they can actually turn it off and not invest in it when they spend there.
Yeah. I had to put Amazon on pause today. I didn't want my account being 100% Amazon. Here's why I think you guys have found a really interesting wedge in product market fit. So listeners heard me, complain a lot over the years, but particularly during the financial crisis when kind of meme stock mania was going on about, we don't teach financial literacy in school. And so a lot of people learn through various channels, and in particular, one of them just being the product providers. And one of the problem with that is a lot of them are casinos, and not to pick on Robinhood, but, a lot of what many of these offerings teach is not the lessons they should be being taught. It's, hey, we're encouraging you to trade a lot. We're going to encourage you to do all these other things, trade options, 0-day options, like all these crazy things they have no business trading. But what's beautiful about what you guys do is, look, I manage an ETF company. For financial advisors, for sophisticated investors, like great. We have 16 ETFs, but a little bit lost in that is the tangible real world connection for a new investor. This is like the Peter Lynch one up on Wall Street, and so what you guys have is you now have that connection to where people can say, oh, I get it. I'd spend a ton of time and money at Starbucks. Like I should probably buy that business. I'm now owner. And that's a very cool lesson to explain to people, younger people, new people investing, but also, as people build their portfolio. I think it's a really thoughtful approach. When did that light bulb come on for you guys? When did you guys figure that out?
I'd like to take credit for this. When we first started this, we were just trying to figure out like how, because when we asked a bunch of people, like, do you invest or do you not invest? It was always the same three things. I don't have enough money. It's not made for me and I don't understand it. But like every person we spoke to said that I know that I should. And so I think that like the average person develops a relationship with money. It sort of starts around 16 years old, and sort of what we were sharing earlier, like most people don't get started until early 30s. So it's like a very long time to build a relationship with money and then not get invested and not take care of yourself. And so we just kept trying to think like, how do you make this more and more fun? That's really the only way to kind of explain it, and where people felt like they actually knew what they were doing without this barrier of like, I have to learn, I have to trust somebody else to do it. And one day my sister and I were at a Starbucks and the barista said that I'll be $12 for 2 cups of coffee. She looked back and laughed and said I should really own stock for how much I shop here. And then the light bulb went off. Like, why can't you own the things that you're using every single day? Like, I don't know how many times you've said this, but like now I was like, I wish I would have bought Apple stock when I first bought the iPhone. It's something that can now tag alongside and be a part of you. And I think it's almost like the simplest, most human way to just get started. And so I think that's our goal. Like even our designs, when you're like, I'll never speak poorly about another company. I think that there's been a lot of technological advancements. Like ETFs are a great way to like own a bunch of companies and to get people invested. And obviously like we were talking about for like a, more sophisticated investor. But I also think that like if you look across the board, every finance app looks the same. Everyone has a graph. Everything has stock ticker symbols. It's very overwhelming for most people. And to actually like manually take the time and the like more people do research buying cars than they do stocks. Like it's either through emotions or friend referral for the average investor. And so the effort, that the emotional effort to buy something in the fear of being wrong is so high for most people. That's why like there's 178 million Americans like still uninvested.
This is the problem that I'd had with so much of finance and investing is there's so much jargon and it's so abstract. So even if it's a Warren Buffett advice, hey, go buy 90%, go buy S&P 500, SPY. But then you're like, well, what's that? Like if you ask the average investor what's in there, like, you know, they're going to have a struggle. And then when it's down 10, 20, 50% or whatever it is, you know, they're like, well, I have no emotional endowment effect connection to this. But I think this is such a massive potential benefit, and we'll talk about this in a minute, about investors having a connection to the brands and ownership. So they're not just a customer, they're now an owner. And that changes everything in all of the way that people think about investing, in my mind. Tell us a little bit about who, you mentioned this to me before, and I know some of these answers, but the traditional demographic is not, you know, an 80-year-old person that's got 100 million. Who is your traditional client? How do you guys think about this, and has it changed over time?
Yeah. So we were pretty fortunate that a few years ago, we had a video go viral on TikTok. I think it's at 47 million views now. Basically, it was just sitting in front of a camera saying, this is who we are. This is what we do. I'm pretty sure the top liked comment was, this is so exciting. I'm going to own all of McDonald's. And it's like, it's a very interesting, you know, response from a lot of people. And so when that happened, and like through a lot of organic content, we're seeing a lot of like across the board, we see first time investors, but definitely it was like next gen, younger people getting started investing. Recently, we've switched to a subscription model, which has been phenomenal for us. And we're like, it actually makes us able to achieve a lot more things. And by doing that, our actual main customer now is we've always been majority female user base, but right now it's a female in her 40s and sort of the head of the household, parent, like basically who we call like the chief family officer. And it's been very exciting to see that there's a lot of like comments that's like, hey, you know, this is my first time I've been invested. This is amazing and like fun. And I want to be able to use this for my family. So our goal is to build out family accounts and sort of expand upon what's being asked of us.
I mean, so we're going to dive into a couple topics here, you know, one of which is, again, going back to this education component. Money is such a taboo topic. Investing is such a taboo topic. But pretend like you're the head of household, your family, you're the mom, you're the dad, and saying, hey, you know, open you an account at E-Trade or Schwab, and we're going to buy some ETFs. Or, you know, even worse, in my opinion, is like, hey, we're going to stock pick, and you pick a couple of stocks. And, you know, the problem is it creates this very weird dynamic within the family that if, say, someone picks a great performing stock, you know, they're proud. Hey, I impressed my father. Look how much money we're making. Let's say you pick a bad stock, you know, and it goes down. There's shame, embarrassment. I don't want to talk about it. We're at the dinner table. Hey, you idiot. You bought NVIDIA and it went down 80%, on and on, right? But this is different, like, because it has this tangible, hey, you guys, you realize we went out to Cheesecake Factory tonight, or we have this Wall Street Journal subscription, on and on. We're actually investing in these companies. And it gives people, it creates that connection between business and investing, which I think is the key connection. There's a couple experiments you guys could run when you get much bigger and you have these free time, and put some, you know, PhDs on staff. One of which would be, this also helps you hedge your human consumption. And so listeners, if you think about this, you know, and you think about inflation and you think about, you know, what you spend money on, everyone has a different inflation rate. You know, we report 3%. That's the inflation. We're like, well, you know, eggs are $12 now or whatever they are, but TVs are way down. And so where you spend your money, it's an interesting hedge and discussion. So it's also funny because you can talk about your spouse. You'd be like, look, man, my spouse spends so much money on Amazon, but for every, you know, dollar we put in Amazon, we're putting into this account. So it's a rising tide in some ways. But again, it makes it's almost like a mortgage. You know, you're putting that money away and putting it to work. I think I heard you mention at one point that, stakeholders, shareholders that own some of these companies actually spend more at the underlying company. Did you guys do a study talking about, I think Walmart might have been one.
Yeah. So we looked at kind of where people, like how people are spending before they own stocks and then after they own stocks. There's no incentive at all. It's just literally the concept of ownership. And we've seen, like, for example, Walmart, after 6 months of people owning stock, they spend 234% more at the brand. It's just it creates loyalty in a new and unique way. I think that there's a huge opportunity for that in the market.
Let me expand on this idea for you, and hopefully it's something you guys run with. The credit cards have done a really good job of this, where they have, you log into your Amex, log into your Chase, whatever, and you see rewards. And it's somewhat annoying because you have to go in and opt in, every quarter. Hey, here's all the deals you have. And there's like 100 of them, right? But again, you don't own those companies. It's just benefits and rewards. However, we have some old Twitter threads, and I'll send them to you later, where I said, hey, what's the most interesting shareholder stock perk? The most famous, of course, you own one share of Berkshire, you get to go to the meeting. But over the years, there's so many that are kind of hilarious and funny. Starbucks used to put a Starbucks card in the annual reports, right? They'd mail them to you and you got a gift certificate to go spend at the company. But there's a lot of the companies. And so we were joking, I got too much on my plate, but I was joking. I said, someone needs to build a website that just lists like, hey, here's the top 50, 100 shareholder perks that no one knows about, some of which you should just buy one share. That way you could get the perk. Like, it's that beneficial. Like, hey, if you're Cheesecake Factory, owner, 10% off, whatever, maybe you get free dessert, right? But who does a really good job of this is the Japanese. And so it is a massive culture of stakeholder rewards for public companies in Japan. And so you can go do a laundry list search, and we'll add these to the show notes, listeners. If you have any particularly interesting ones, leave it in the comments on YouTube or on Twitter. But it's really fun to see some of these. And so now you have a really interesting wedge where you're in between the consumer. Say, hey, I know they're shopping here, but also that they're an owner. And hey, let's offer. And so there's you guys do a $5 a month subscription, $36 a year. So not bad. But you could say, hey, look, eventually we want to get you to where the rewards dwarf this payment, right? So you're getting extra benefits by just being an investor here. And we're kind of going to the companies at some point and say, hey, you should offer to these people, because also now that they know they're an incentivized stakeholder, they'll spend more.
I think that's our goal, because I genuinely believe it's a win-win. I'm already spending money at these brands. Why not own them and have them be a part of my life? And then if those companies grow, I get to be a part of the growth of where I'm already patronizing. Two, if I then have the benefit of actual real benefits that come with stock ownership, the intent of the stock market and what it used to be is you were an owner. How do you feel like an owner and be actually a part of these brands where it's not yes, growth is incredible. People invest for the benefit of the long term. That's our goal and our hope too. And if we can get people to start a lot earlier, amazing. Or people who have never invested before, that's the intent.
It's almost like an entirely new class of consumer owner that's supercharged, superhero customer, right? It's cool, you got your consumer, cool, you have your owner, and then this is both. And to my knowledge, kind of hard for them to find that information, and you guys are collecting it. What also is interesting about y'all's app, and by the way, listeners, you want to go try it out, use the code INVEST, you get $25 to get going, is that the design intentionally is not focused on buying and selling, right? Particularly selling. And one of the things that we kind of bemoan, most of the apps and the transaction-based brokerages is they want you to have activity because they make money on that. And, not only is the buying and selling costly, bid-ask spreads, et cetera, but also it's taxable. And so this long-term view, you look at your app and it's almost like you're just stacking shares in companies, right? It's you're consistently just adding. And the people that do want to sell or that, want to get out, make any generalizations. Are they selling the companies one-off, or is it traditionally they're you know what, this is not for me, I'm going to close the account, I'm going to move the account, or I ran out of money, so I gotta withdraw all this. I assume it's all or nothing at some point, or how is it traditionally viewed?
probably more all or nothing. There are definitely people who feel like, hey, I don't have the money or the finances right now. And at any point in time, they can sell. They can withdraw their money. But we do see a lot of people like even pause sometimes and then start up again later on. So I think that we want people to feel like that they have full control and safety over what they're doing.
You guys are clearly finding, you're having a moment, right? You're finding kind of this product market fit now, which is exciting. You know, when it happens, you know, when you see it, and it's fun. It's a really cool feeling. Talk to us a little bit about building this. How difficult was it in the early days to make this connection between the payments and the companies? And then talk to a little bit about the universe. Like, do you guys go all the way down to some of these micro caps? You cut it off at 10 billion market cap with some of these stocks, or how do you think about it?
Yeah. So we'll try not to give too long of a story.
Because you guys got started what year? What was the origin year?
So we started this actually at the end of 2017. And so this was our last semester of college. It was one of those things where we graduated. We both had jobs. I was supposed to go work with JP Morgan. My co-founder was going to go work in the wealth management industry. And we had like 3 months until we had to accept our jobs. So it was called the Gerson School Accounting Building. And like both of us weren't in accounting, but they had these huge whiteboards. So we became friends with the security guards. We used to go in there and work basically every single day. We used to call law firms, you know, just try to ask for like different advice, even though we didn't have money. And it took a lot of work to work with the SEC and to build this out to like actually be an investment advisory service. So right now we are investment advisors. The app looks and operates like it's a brokerage because you're buying into the stocks that you spend with. But every single company on our platform actually has an assigned risk tolerance that we update consistently. And so how people put their information into our app determines whether or not we actually allow them to invest in certain companies. And so it feels like it's a part of your life, but we in the background make sure that we're always adjusting. And it took a very long time for that, but the actual technology itself. So I had to teach myself, and this is before AI or anything else. So I had to teach myself regular expressions. So I bought these like red sunglasses and I sat in a computer and I would just like write regular expressions every single day for weeks upon end. It was a very interesting experience, but because we wanted to set the intention to think of like what's every public brand that you've ever spent with. Because I think you're mentioning it earlier. I've invested in like 137 companies. The amount of places that we actually spend with, that's not just consumer, like, you know, discretionary. It's a lot of different things that we actually put our money into. And so we want every public company, every subsidiary underneath it. So if you do shop at Whole Foods, the app recognizes that it's owned by Amazon and will invest you in Amazon. And then even down to the like, you know, bottom lower product level, which hopefully one day we can get to SKU level data with brands. And so we've just spent a really long time building this out. At the technology, there was a lot of negotiation, both on the brokerage side. So we actually had to negotiate the first contract ever to actually do all-in-one encompassing trades for like low fractional share amounts. So that's been a very long time. And then we use Plaid. So basically all the best companies in the world use that, supports millions and millions of users to link people's bank accounts securely, and then to get the transaction data. And then we launched this sort of at the end of 2020, early 2021. That's kind of when we went viral. We had a really amazing moment there. We were able to bring around our first institutional seed round of funding. And then we kind of put our heads down and like really focused on building sort of the dream app that we wanted to, and really launched the official version at the end of 2023. And then like immediately hit product market fit with our new designs and our new user experience, growing rapidly. Took a hard pivot to a subscription model, went from a few thousand in revenue to millions. And now we're closing our Series A and very excited about it. So
yeah, congrats. What do you guys learned? You know, often the journey of the entrepreneur and the founder is one where, as you build and iterate, you get feedback from investors and users, and you're like, oh, wow, they're using this way, or they have found some insights that we never totally expected, or everyone hates this and banging on this and they think this part's stupid. What were some of the insights the last couple of years that you guys kind of hit upon that you either, incorporated, got rid of, all that good stuff?
I would say the biggest thing that we learned when it comes from a consumer side is don't oversolve. Actually, so we became very, very data obsessed, and actually we've always listened to our customers and interviewed them. We used to do Zoom calls like this, just to get as much advice as possible. But basically, one of the things, for example, was that most people really just loved the fact of that, it just invests you where you spend. That actually keeping it very, very simple, only focusing on the brands, those sorts of things is the absolute most important to people. So it's we just focus on how do we make that experience the absolute best. And one of our things that we built, we call it our magic moment, and it's called the time machine, is that actually when you get started using Griffin and you go through the onboarding process, we actually show you where you could have invested in the last 30 days. And then most people say I actually want to buy these stocks. And then we allow them to get a jump start on their account by investing in their past. So they feel that they can already get, so when you open the app, you already own 10 plus companies. It's a very cool user experience.
Talk to us a little bit about how you guys find your customers. It's a modern world. You mentioned a video on TikTok going viral. I imagine there's a lot of word of mouth too. We mentioned the referral idea earlier. And listeners, I don't keep any of that. I'm donating all my proceeds to you guys because I don't want to. I want you guys to have it. But other than kind of word of mouth, how do you guys think about getting new customers in this new 2025 world?
I think there's multiple ways. So right now, we built this to be a consumer business where our end customer is the individual, and so that they feel that way. So when we originally started, it was a lot of organic content. We've been fortunate that we've gone viral multiple times. I think actually last month we went viral again. And so it's just always creating content. But then we take that content, we repurpose it into ads. And so we've gotten very, very good. We are basically head of marketing. His background is it's one of those dropped out of Harvard, built a company, scaled it to 9 million users, sold it to DraftKings. And now he runs our entire marketing department, and the focus is on making sure we have strong, repeatable content that people connect to. That's more organic. And then we can use paid channels to scale. So we've actually built something that's very repeatable. And so that's kind of why we went out to raise, well, we actually didn't go out to raise a Series A. It was preempted, which is pretty awesome. And so we're going to use that new capital to scale what we built. But it is very cool to see, a lot of users refer to their friends. A lot of our ads are naturally just organically shared. And then it's how do you focus building out product-led growth, things within the app that actually make it more meaningful for people to share with each other. And then on top of that, it's just distribution. So actually yesterday, we just got a letter of intent from a very large publicly traded company where we're going to use our technology because we serve a unique audience that's mostly not touched by the investment industry. The head of household, and just to help provide investment opportunities for potentially 10 million plus people that are part of their company and their platform. And so it's distribution goes through business partnerships. And I think we can, again, play in a unique space in loyalty. So we don't have to just work with the wealth management industry, which we are having conversations with that now, but also we can work with brands. And I think that's the hope.
Well, what you guys do, your message, it's so easy. It lends itself to such a great video messaging. Who came up with stock with you shop? Is that you? One of your customers? Who came up with that phrase?
That was us. Yeah.
Yeah. It's such a good one. But you can just picture a couple sits down to Cheesecake Factory and the spouse is like, you shouldn't order the dessert. Come on. We just got so much food. And we're like, well, actually this is, we're owners and we're buying more if you, the more you spend, on and on. It's a very video focused sort of messaging that I think will resonate and continue to resonate. Do you have a most memorable investment across your timeline, good, bad, in between?
My most memorable investment, and this is as honest as I can be, is Helios and Matheson, who owned MoviePass. And I was younger and I like believed in a lot of what the founders were saying and that they were going to reach profitability. And so I put a lot of my personal money into it because I really liked the concept and I didn't diversify into anything else. And I lost a good bit of money on it. And it was a really good, big learning lesson. And, you know, so I hope that there's like, I think that's kind of where our goal is more to be the antithesis of that and to more like invest people in things that are validated and that are being used consistently and brands and more blue chip stock companies. And to also like create honesty and transparency in an industry that we feel like needs it a little bit more.
I saw MoviePass on both the first go round investing and then it just did a recap and relaunched. I haven't heard anything about it. I'm curious to see what the idea is interesting. Yeah, it's back up and running. So who knows, listeners, you may get a second shot.
AMC created A-List off of it, and they've done really, really well with that since. So I mean, good for them. And I loved the concept of MoviePass. I thought it was so cool.
This has been a lot of fun. Tell our listeners, where do they go? They want to go sign up for the app. Make sure you use code INVEST for a free $25. What's the best place?
Yeah, so you can just find us on the App Store, Griffin, on just Grifin. It says positive daily investing. We're actually in the top of the charts right now, which is pretty cool. It's been pretty consistent there. And then also you could go to griffin.com to learn more. We actually own griffin.com. There's a company called InnerOut, multi-billion-dollar company out in the UK, I believe, that owned Griffin.com for like 17 years. We reached out to their customer service. We told them our story, who we are, the change we want to make in the investment industry, and they dropped the domain, and we were able to pick it up.
Wow, dude! That's not as good of a story as the conglomerate in Europe that owns Faber.com. I keep trying to get them to give it to me, and they're like, "Talk to us when you got six figures. We'll drop it then."
yeah. Ours was a little different, so we didn't have the money at the time, so it really worked out well. But yeah, just find us anywhere. It's a super simple sign up process. Obviously, you have to be of legal age. We hope to expand to families soon.
Awesome. Aaron, thanks so much for joining us today.
Thank you. This was fun.
Podcast listeners will post show notes to today's conversation at mebfaber.com/podcast. If you love the show, if you hate it, shoot us feedback at themebfabershow.com. We love to read the reviews. Please review us on iTunes and subscribe to the show anywhere good podcasts are found. Thanks for listening, friends, and good investing.